Well, thanks for joining us once again, and we're going to take a look at your ag commodity trade as we get ready for the big USDA reports coming out today. We're only 45 minutes away now from their release, and here to talk about it, we have Brian Hoops on the line with Midwest Market Solutions, and he is based in Springfield, Missouri, where I understand, by the way, Brian, I spoke with someone yesterday, and I had heard that in southwest Missouri, the corn is like head tall or head high already out there. Sounds like tremendous growth in quite a few areas there.
Yeah, the corn crop really looks good. There is some areas that the corn is starting to curl up as it's been fairly dry in that part of the country. They did get rain last night, so that will sustain for another week. But yeah, there's a little bit of concern starting to mount that this crop got up to a tremendous start and very quick emergence and growth, head high, like you mentioned, but starting to run out of a little bit of moisture. So it's a little bit of a concern right now.
But the trade was looking, of course, at the latest USDA crop progress numbers, and the corn condition is still like 77% good to excellent. That's only 1 point under last week, and that was only 1 point under the week before when it was the second highest ever for that time of year. So, I mean, regardless, it's still a pretty good corn crop out there across the country at this point anyway.
Yeah, nationwide, this is one of the highest rated crops we've seen in recent memory, over 20 years. So no concerns right now about the corn crop nationwide. It's going into the pollination season. So we've got several weeks yet where the market can become concerned, but the forecasts look generally favorable. A lot of rain over last weekend in the eastern Corn Belt. Now as we go into this weekend, western Corn Belt got a little rain last night, and there's a lot of rain chances in the 6 to 10 day time frame for most of the Midwest, and that's going to keep our rally attempts limited.
But as any producer will tell you, and I mean I've been through it numerous times, you have corn with a wet feet and it doesn't have much of a root system, and you get around July 4th holiday there, if it hasn't pollinated by then and it turns hot and dry, it can really go into distress in a hurry because of no root system. So there is that setup this year, and we're not home free yet. The markets have to keep that in mind. I do want to take a look at our corn market today. It has been trading firmer after the USDA crop condition report came out yesterday, and we're hanging on to gains heading into the report. Kind of intriguing here why it's doing this. July corn 4 3/4 higher at 372. December up 4 3/4. In the soybean trade, let's take a look at July. We are now trading a penny and a quarter higher there at 9.55, but it's off its earlier morning high by about 8 cents. November now up a penny and a quarter at 9.75 per bushel. Meanwhile, on the wheat trade in Chicago, July wheat, right now we are showing a last trade of 520.5. It's up 6 on the day. Kansas City wheat has July currently trading at 539. That is up 4 1/4 cents now. And if we switch over to the Minneapolis wheat market for our spring wheat trade, we are a penny higher at 590 3/4. And in the cotton market right now, you have your current July contract trading 53 points higher. We're at 95.28, and December up 57 points at 92.25 cents per pound. We'll come back in a moment, Brian, and analyze our livestock trade on a Tuesday when we come back after these messages. Let's take a look at our livestock trade, and we're going to welcome a little extra help from Brian Hoops of Midwest Market Solutions in Springfield, Missouri, as we dive into our futures. Let's bring up our live cattle trade for you. Started out higher and immediately headed south, and now we are mixed. We have June live cattle down 17 at 108.48 per hundredweight. August back to unchanged at 104.18. So haven't accomplished anything in that month yet. We have October down a nickel now at 106.95, so all over the board here. Not moving much in either direction though. And if we take a look at our feeder cattle trade, here we go, where we have the August contract now trading 57 lower at 145.38. And now you have your September down 77 at 146.48, and October down 89 at 146.68. So right now we're kind of in the middle of our trading ranges here on the feeder cattle trade. A fairly wide swing there in price, but it looks like about $1.70 or $1.80 wide or so. What's going on with this cattle trade here? We had signs of very strong cash cattle market action last Friday, and the market can't seem to accomplish much here.
Yeah, part of the reason we can't get much going on the upside, show list numbers that came out yesterday nearly 30,000 head larger than a week ago. And we do have the packer capacity. We could increase kills enough to absorb this extra kill, these extra numbers, but the market is a little fearful that the packers won't expand their kills, and we're going to see a retraction in prices here. We had the outside reversal yesterday, following through with some selling interest today, but it's not real committed to the short side as they're waiting for a little bit of direction from that cash market. Certainly strength last week, steady trade this week with these bigger show-less numbers, I think would be a victory for the bullish traders.
Okay, let's take a look now at our lean hog trade. I want to get your thoughts on this one. We're firming up across the board. Currently, you have your June futures trading at 80.40 per hundredweight. So now we're back within a dime of our high of the day. We're up 25 cents from where we closed yesterday. And if you look at July, it's now over $1 higher at 80.42 per hundred. So we're $1.02 higher there, but the August is up 67 at 76.22. I've been commenting on that earlier this morning where the deferred contracts are really lagging behind. They're not gaining like what the nearby contracts are. In fact, on the open this morning, we had the October and December actually lower on the day. They're on the plus side now, but still dragging their feet. And they are already at a big discount here to the nearby July contract. What is up with that here, Brian?
Yeah, it's pretty typical. Once you look at some of those deferred months, our demand is usually much softer compared to what it is for the summer months. So that explains part of the discrepancy in price. The cutout values have been moving higher, hog weight's down, and that's a little bit more reflective of what the front month futures should be pricing in. So not surprised to see this market try and rebound and recover after a technical reversal day, but we've not negated that day yet either. We've got to take out yesterday's highs to do that. We're seeing the most strength in the front month on higher cutout values, but again, this market here kind of just in a sideways choppy type mode after some early trade losses. Now we're seeing a little bit of recovery. Could give back some of those gains by late in the day if we do not take out yesterday's highs.
And it'll be interesting to see what kind of reaction we get once the government reports come out here at the top of the hour, too. All right. Thank you, Brian. I appreciate the time very much. Brian Hoops, the president of Midwest Market Solutions. He's in Springfield, Missouri.